Luke, we were talking offline and you threw out the number 64 million per Bitcoin. So let's just jump right into it. What's the math behind that? How did you get to that number?
Yeah, so it's 64 million by 2030. So I wrote this article in 2021 looking at Bitcoin through the lens of it being an emergent technological revolution. And I said, hey, look, if Bitcoin is going to be adopted by the masses, it's going to be adopted in an exponential fashion. So that is why I get to the deadline of 2029, because I looked at many of these other previous technologies that have been adopted mainstream in the past 50 years. So I looked at things like the internet and I looked at the smartphone. And if you look at both of those technologies and their adoption curves, on average, it takes them around 10 years to go from 0% adoption to 10% adoption. And then they hit like an inflection point and they go from 10% adoption to 90% adoption. And a lot of people will say, "Oh, but Bitcoin's not at 10%, adoption, Luke. How can you make the case that it's going to go from very low adoption today? I think it's around like 1% if you're measuring it based on-chain data to 90% adoption by 2030. Maybe we can get to that a little bit later, but my argument is hinged upon the fact that Bitcoin is a monetary technology. Okay, it's not. I don't think we should be measuring adoption by how many people are using it. I think we should be measuring adoption by how many coins there are available for sale on exchanges and who are the people actually allocating and adopting Bitcoin with their monetary energy. So I made the case that 2020 was that inflection point. And now that we have these billionaires like Michael Saylor, more recently we have BlackRock and all of the largest money managers around the world racing to adopt Bitcoin. And we haven't even talked about the fact that nation states like Oman, the Kingdom of Bhutan, and El Salvador are all mining Bitcoin. I'm making the case that these large entities who are bringing a large amount of economic activity and economic adoption, so to say, to the Bitcoin space, these are the entities that are actually going to push Bitcoin, the monetary asset, through this exponential wave of adoption in the 2030s. I'll pause there. I know I've said a lot, but essentially, when you run the maths, I just use the multiplier effect. So I think back in 2021, when I wrote this, I think it's like an 8,000 word article, nobody was calling it the multiplier effect. But Willy Woo has like a really cool chart on his website, and it shows over the past 10 years how much has $1 coming into the Bitcoin market pushed up its market cap. And I just said, hey, look, let's be conservative. Let's take a 5-year range. So over the past 5 years, on average, for every $1 that's come into the Bitcoin network, it's pushed the market cap up by around 3x. So I just ran the numbers and I said, if half of the world's wealth wants to flow into Bitcoin over the next 10 years, that's $450 trillion of demand. It's going to push the Bitcoin market cap up by X, and you're going to get a price tag of $64 million per coin.
That's an interesting framework for adoption because most people, when you talk about Bitcoin adoption, they think everybody's using it as a medium of exchange. Billions of people across the world have Bitcoin in their wallet. But if you're trying to conceptualize number go up, it matters more like the high net worth individuals and institutions that are adopting it, which we're definitely seeing that progress. We've already seen Michael Saylor was the first really mega billionaire to start aping into Bitcoin. And now we're getting these institutions with the ETF. Do you think the multiplier effect would grow based on more capital, right? So, for example, if $1 trillion of inflows went into Bitcoin versus $10 trillion of inflows going into Bitcoin, would that multiplier effect grow with more capital trying to squeeze in there?
I think so. And this is where you can get even more speculative and even more bullish because I recently interviewed BritishHODL and he talks about Bank of America's multiplier effect. Bank of America believes that for every $1 that flows into Bitcoin in a very narrow window of time in 2021 in the bull market, they believe it pushed the Bitcoin market cap up by like 119x. So I think the larger the amount of capital trying to come in, certainly I think we could have a higher Bitcoin multiplier effect. But I think those things are a lot more difficult to measure. And even in that article from Bank of America in 2021, they were actually bashing on Bitcoin when they cited this 119x multiplier effect. So that kind of makes me think, maybe they were not being completely honest with, the data they were looking at and putting out there, because the title of the article, I don't remember by name, but they were saying Bitcoin is far too volatile. Look at how much capital comes into Bitcoin to move it by 1%. So I think it's very difficult, but I think, yes, I think overall, I think the multiplier effect is going to be higher in bull markets. And I think the larger the amount of capital that tries to flow in, like $1 trillion, like you said, I think that is going to have a larger impact on the multiplier effect. Maybe it goes up to 6, 10, maybe it's 15 in a short amount of time, but it's very difficult to measure in the short term. That's why I like to kind of zoom out and use like a 5-year moving average of the multiplier effect. And right now, as we speak, it's actually nearly at an all-time high. I think at the time of recording, the multiplier effect is around 4.8, and that is nearly the highest level it has ever been. So interesting times for this up-and-coming bull market.
You released a video in the last week or so talking about how a recession doesn't necessarily mean like the end of the world for Bitcoin. A lot of people think, oh, Bitcoin's never been through a recession, we don't know how it will perform. Why do you think Bitcoin could still go on a massive bull run even if we go into a recession in the next year or two?
Listen, the current system itself is worth $900 trillion. If we go into a recession, what people think is that no more money will be printed if we go into recession. That's a complete and utter misalignment to actually what happens. If we go into a recession, it actually creates more latitude for the Fed to print more money to ease into the recession, to allow the recession to be softer. So if a recession happens, what a lot of doom and gloom boomers and $1,000 net worthers believe is that as a recession happens, credit contracts. While it may do in the short term, what actually happens is as a recession happens, they have the ability to expand credit. So if a recession happens, the best thing that can happen is that a recession happens. The best thing that it sounds awful, but the best thing that can happen is 10% of the population of the workforce loses their job, because then tomorrow the Fed will be out saying interest rates are zero and we've printed $2 trillion in order to do this. And unfortunately for most people, is that money finds its way into risk on assets, not their pockets. So while it's awful for most people, it would be great for anyone with risk on assets. So a recession is not the death nail for Bitcoin. It's in fact, the rocket boosters turning on.
Yeah, I agree. And I guess that's why education is so important, just on how money works in general, right? Because all you have to do is buy hard assets, because when the recession inevitably happens, we've seen over and over again, they always just resort to printing more money, and there's no reason to think this next time would be different.
It's all you can do, right? And if the U.S. wants to remain its preeminent position and extend its life for another 100 years, all it's got to do is go through a period of very high inflation for 2 or 3 years and reduce the debt to GDP ratio, and you're good. You've got another 50 years to worry about. Kick the can down the road. And what is the one thing I can guarantee every politician will do? Kick the can down the road. Guarantee that. There is not one politician, I don't care what anyone thinks about RFK, Vivek, Trump, I don't care what anyone thinks about anyone. There is not one politician that will not kick the can down the road.
Yeah, I totally agree. It's all in their personal incentives, right? Because no one's going to be the guy that runs on the platform, oh, I'm not going to kick the can down the road. We're about to have a nasty recession if you vote for me. Nobody's going to do that.
No one's doing that.
Not to get into a huge conversation about CPI, but if the official CPI numbers over the last 20 years have been like 2.5%, call it, I've looked at what other things have done. Housing, college tuition, healthcare premiums, those have all gone up way faster than 2.5%. So the CPI, I'm not saying it's like blatantly manipulated. I think they try to look at certain goods and say, okay, this, box of cereal went up by this amount. But like, it's clearly structured in a way to remove some of the most impactful things in someone's life, like paying for college for their kids, health insurance premiums, and a home. When those things are not accurately reflected in the basket, the cost of living has clearly gone up more than 2.5% per year. That eats into whatever return you're getting in stocks.
Right. My mind went to CPI too, and I will say I think it is blatantly manipulated. There's two things I would say are useful about CPI. One, you can use it to try to gauge what the Fed is going to do and trade assets accordingly. And two, you can gauge the trends of inflation, right? So having the basket of goods, right? If one good has like let's say OPEC cuts production, obviously, if you're just looking at oil prices in that scenario as a measure of inflation, it's going to be incredibly manipulated. So having all the goods, you could see the trend better. But where inflation matters is the goods you're actually trying to buy. So if the basket's filled with Kraft mac and cheese and Oscar Mayer hot dogs and all this stuff that's easily mass produced and doesn't go up in price that much, it's irrelevant to you what the percentage increase is. But if you're trying to buy beachfront real estate, if you're trying to buy grass-fed ground beef, if you're trying to heat your house, drive your car, etc., those are the rates of change that you need to look at specifically, and it's way higher than CPI. And you also see, like, the White House, they literally use semantic games. They'll say, oh, inflation is coming down. It's disinflation. Prices are still rising. And they leverage this CPI. They weaponize it to try to make inflation not seem as bad as it is.
Yeah. And we're talking, I think it's literally the day after the video has been circulating on Twitter of the president and the press secretary talking about Thanksgiving dinner. And they had this line about it being the 4th cheapest ever. And I mean, yeah, the mental gymnastics that you need to make that sort of statement, like they probably found some economists to look at it in like real purchasing power terms. Oh, show me the nominal wage salary of an American, and let's find a basket of goods that could pass as a Thanksgiving dinner, and let's run the numbers and compare it in the past, and we'll call it the 4th cheapest ever. And it's just so obvious that that is not what people are experiencing when they actually buy food for themselves. And you just hit on another great point, which is like an economic fundamental point that I love to harp on, but most people, like, their eyes glaze over because it's just like very conceptual. But there's really no such thing as calculating quote unquote prices in the aggregate for an entire economy. I mean, Michael Saylor has done a good job talking about this, so maybe it does, land with some people. But it's just, inflation is not a singular number to the 10th decimal place. It's a joke that we think it could be that. If it's literally different for every person, and even for yourself, your inflation rate is different from one time in your life to another. We talked about college, for example. When you're at the stage in your life when you're sending your kids to college, you care about college tuition. Right. If the BLS decides to, not include college tuition or include some bogus calculation for it, then you don't really care what's in CPI. The fact that they don't include homes, like, why? That's going to be your biggest expense. If your goal is to own a home, then that's in your cost of living bucket. So yeah, my point is just that cost of living is a very personal thing. And we kind of kid ourselves to say, oh, look, prices went up 3.4% last year. No, there's no such thing as prices. There are individual prices that individuals look to buy. But you also made a great point that there is some value in terms of gauging what the Fed's going to do, and then trends. The way I say it is like, yeah, directionally it's true. Do we all know that prices went up since 2020? Like, for sure, we do. Can we say that prices went up by 20.1% for everyone in the economy? No, you're kidding yourself if you think it's that precise.
Right. Because everyone has a different lifestyle. Everyone's buying different stuff. And you're right. Michael Saylor has made this point abundantly clear within the Bitcoin community that inflation is a vector. If you want to live in your parents' basement, not pay rent, and watch Netflix and eat Cheetos, like, your inflation rate is going to be very low. But if you want to do cool things in the world and you want to eat good food and you want to travel and you want to send your kids to college, then your inflation rate is going to be fairly high.
You put out really good videos all the time. And one of your recent videos talking about the blockbuster GDP number. GDP is rising. Yeah. All is sunshine and rainbows, allegedly, if you're looking at it. Can you tell us why that's not exactly the case?
Yeah, in short, so a big confusion is that GDP, people use GDP to represent wealth. Like, if GDP is going up, then we're all getting richer. And of course, GDP is not wealth. GDP is activity. Okay, and there's a very, very big difference, right? So that activity could be digging holes and filling them back in, for example, which would be destroying wealth, right? Because that would be taking perfectly good shovels and perfectly good men and wasting them. So I think, sort of broadly speaking, people want to differentiate between GDP and wealth. Now, governments tend to measure GDP because, of course they would, because they destroy wealth. They're very good at keeping people active, right? Mm-hmm. Throwing money at them, and especially if they have a central bank. But they're very, very bad at creating wealth. In fact, you could argue that every single thing governments do destroys wealth. And so if you're focused on the actual wealth of a society, then it would follow that you should make the government as small as humanly possible. On the other hand, if you're interested in activity, well, governments are very, very good at activity. And so when we look at the GDP number at the moment, it is quote unquote blockbuster. I think it came in at 4.2 or 4.9 or something. Anyway, a very high number for the last quarter on GDP. And the thing is that once you dig into those numbers, it's a lot of activity, it's not wealth creation. So it is overwhelmingly fueled by deficit spending by governments, which is debt. That's borrowing from the future to waste it today. And then the other thing that's driving it is consumer debt. So consumers are spending more, but they're earning less. This is not sustainable. Again, at best, this is sucking from the future. But in the context where incomes are actually going down, it starts to look a lot worse than that. So consumers are basically running through their savings. There were trillions built up during the pandemic. So consumers have essentially run through that. I think the Fed estimated that as of October, so as of last month, those pandemic era savings are all gone. At this point, they're actually getting deeper into debt. That is going to bite us in the future.
Do you see similarities between Bitcoin and like the foundation of America?
Yeah, 100%. And my Twitter banner profile is actually the founding fathers with laser eyes when they were signing the Declaration of Independence. And maybe this is just like me being nostalgic or longing for the good old days of the American Revolution. I'm really fascinated with that part of history, but I really do believe Bitcoiners are the modern day equivalent. We're revolutionaries in a sense, right? We're trying to bring forth a new, better system from the one that we're currently under. But I think there's one really key distinction, and I love the Constitution. I think it's great. But a key point is that the Constitution is not what gives you rights, right? And this is part of the ethos of America. Our rights pre-exist government. They don't come from government. They don't come from the Constitution. They come from God. And the Constitution is just basically like, hey, government, you're not allowed to interfere with X, Y, and Z, right? You're not allowed to infringe on our right to say what we want, to worship how we want, to bear arms, to have property. But at the end of the day, and this is really, I think, Jason Lowery's key thesis, is that that's just a logical system, right? There's no power behind the Constitution. It's just a piece of encoded logic, a piece of paper, and it relies on trust. You have to trust the government doesn't interfere with your rights. You have to trust that the Supreme Court actually upholds the true constitutional values. And trust is a big security flaw, right? Where with Bitcoin, it has this physical defense mechanism of like real energy that I can say whatever I want via a transaction, and I can have property with Bitcoin, and there's no interfering, right? It's not asking for permission. It's giving you freedom of speech. It's giving you property rights in a way that can't actually be infringed upon by government, which the Constitution, as great as it is, and as much as I agree with the items in it, it can be infringed upon, and it is, right? Do we truly have property rights when our money is devalued without our permission? I don't think so. But Bitcoin, the stereotypical phrase, right? Bitcoin fixes this.
Yeah, completely agree. I mean, you made an interesting point how like the Constitution itself doesn't necessarily give you rights. It's more of limiting those natural rights from being taken away from you by the government, which is effectively other people. So it's like preventing other people from taking away just your natural rights, which I think is super interesting. I think
exactly. And I mean, that's a great framework to put it, but does it stop it from happening is ultimately what it boils down to. And I think that's why the Second Amendment is the second one, right? Because that's sort of the last defense of all the other amendments. But with Bitcoin, it kind of has this Second Amendment built into it. And that if you try to attack the network, you're just going to be met with a giant wall of energy, and you're going to have to burn so much energy just to even try to attack it. And even then, your attack's just not going to be sustainable. So that's definitely how I sort of think about Bitcoin and the Constitution.
Yeah. I mean, I think of the Constitution and like a Bitcoin full node as being pretty similar, right? Like the Constitution limits other people, the government, from taking away your rights. A Bitcoin full node is code that you run on your computer, rules that you enforce on your own computer that prevents other people outside, that are on Bitcoin or not on Bitcoin from taking away your rights that you put on your Bitcoin full node, which could be something like 21 million Bitcoin. You make that rule and you impose that rule on yourself and the network of whoever wants to join your network. And no one outside your computer can change the rules on your own computer.
Yeah, I like that. I hadn't thought about it like that. Effectively the consensus rules are, I have freedom of speech, I have freedom of property, I have freedom to bear arms. That's similar to the 21 million and to the 10-minute block times and the difficulty adjustment and the halving. Those are all the consensus rules, and if you try to break them, all right, we're gonna revert to the Constitution as basically the decider of things. And another comparison between Bitcoin and the American Revolution is that America is the OG decentralization, right? First off, you have 50 states, 13 at the founding, and they all have their own rights. So if the federal government's doing something that the states don't agree with, they can tell them to F off, right? And so if you don't like how one state's governing, you could go to a different state and live there. And so the power is distributed in that way. And then if you break it down even further, we have the judicial branch, the legislative branch, and the executive branch, and they all have to sort of intermingle. And similar to how Bitcoin, you talk about this a lot, is designed to not change, right? Changing Bitcoin is very hard. In the same way, passing laws in this country is very hard, and that's a feature, not a bug. You don't want one person to be able to change the rules of America, right? You want it to be a grindy process, and you have to get through lots of hoops. Not to say that, it's impossible to make changes in this country, and clearly I think it's gotten easier to make negative changes and infringe on people's rights. Certain areas of the government have been leveraged to do so. I would say specifically is sort of the three-letter agencies, right? They're unelected officials. They're not necessarily bound to any sort of voting constituent like the Fed, the FBI, the IRS, the TSA, all of those. I think they're probably the biggest infringers at the moment. But in the design, America was decentralized, and it still is to this day. Ultimately, the states are what's really holding America as a bastion of freedom. You've had, during all of the COVID madness and lockdowns, Florida became a home for freedom. Texas became a home for freedom. Tennessee, a bunch of other states. And we don't have to, we can shift gears to this, but I think that's how Bitcoin ultimately plays out, because I don't see the federal government, their incentive, right, is to delay sort of a Bitcoin standard for as long as possible, right? They want to preserve the fiat system. They want to maintain the ability to print money and fund their operations that way, because ultimately they can't do it through just taxation. They need the money printer. But the states aren't incentivized in the same way. The states are more incentivized to care about their local people, their economy and everything, and maintaining sovereignty from a financial sense, right? They don't want their citizens to have their bank accounts frozen for saying the wrong thing. They don't want any of that, and they don't want inflation in their county or their town or their state, right? So I think we see Bitcoin adoption occur from a state level up sort of thing. And it's really already playing out. A lot of the legislation for Bitcoin's come at the state level so far.
Yeah, the states can't print their own money, so it makes sense that they would, not want to follow the rules of someone that can print their own money and take their assets and do whatever they want. Same with nation states, right? Like we see something like El Salvador come out. Like if they don't have the privilege of being able to create US dollars at will and finance whatever projects they want to finance, they might as well just adopt Bitcoin and save Bitcoin and issue bonds to buy Bitcoin of the IMF or whoever is going to actually buy those bonds, and then just hold Bitcoin. Like if you don't have a money printer, you might as well just hold the best money there is. And I would argue, like, even if you do have a money printer, you should probably just print money and buy the best monetary tool that there ever will be.
Yeah, I would agree, but I don't think they've figured that out yet. If they have, they're doing it under the table in a way that we can't necessarily grasp. But you're 100% right, and about the states and comparing them to other nations. And I think people often myself included, forget that an individual state, like it's its own sovereign entity. I think what is it, New York and California would be like the top 10 or top 5 states in terms of GDP, which is not that GDP is like indicative of anything, but it's the best metric we have for determining economic output. But like individual states within America possess a lot of power, more power than other countries. So when they don't have access to a money printer, like you said, so they're incentivized to adopt Bitcoin. Anyone without a money printer, your best option, if you're not the global reserve currency, is to choose some sort of neutral currency that others can't manipulate.
What would you say to the Dave Ramseys of the world that are just so far down the fiat rabbit hole and they're not putting their clients in Bitcoin at all? I kind of view that almost as like negligence, right? That I view that in the same lens as a doctor that just puts their clients on pills and doesn't tell them to like change their lifestyle, be active, eat right. Would you view it through the same lens? And then how would you go about, trying to orange pill someone who's indoctrinated into the Dave Ramsey philosophy?
Yeah, so I would say, unfortunately, that while I think that it's not the right thing to do, right, obviously, because otherwise I wouldn't be advising clients on Bitcoin, it's still a relatively new technology. And most of these advisors, I think if we provide some context as to why they're against it, it kind of makes sense. Not that context doesn't forgive bad behavior, right? But it does provide some reasons why we are where we are and why the financial community is kind of hesitant to dip their toe in. So for the most part, right, like advisors don't want to be associated with things that are scams or bubbles, right? Or and if you look at the past, right, like the .com bubble, I think is a perfect example of that, right? There were plenty of advisors that were helping their clients get into these tech stocks, right? And they got like the poor little guy involved at the end, and then the guy went broke. And so I think when advisors look back at that, right, they have this fiat mindset as it is. Like we're all taught from the beginning as financial advisors and planners that the thing that we need to do most is to protect clients against inflation, right? And so like they need us to help them get quickly invested so that their dollar doesn't lose purchasing power. And so that aligns perfectly with Bitcoin, obviously. But if you don't think that Bitcoin is the solution to this problem, right? If you think that this problem is just something that is always going to exist because you learned in a textbook that in order for economies to grow, right, we need inflation. And so changing what the monetary system isn't a solution to a lot of people right now. The solution is through investment. And so in order to protect their clients, they want to make sure that they don't invest their clients in things that are highly volatile and that potentially could go to zero, right? Where they, buy tulips, quote unquote, for their clients. And then the next thing you know, like the bulbs are worthless, right? So I think if we provide that sort of context, then yes, it makes sense why advisors are not actively allocating clients to Bitcoin. That, and, while I have like what we talked about earlier with the SEC, while my position is that the SEC has given enough guidance where somebody like me can go and advise on Bitcoin, I think the opposite is true for a lot of advisors. They haven't given enough guidance to these compliance departments to outright say, hey, you can help clients with Bitcoin, right? And so because they haven't done that, a lot of compliance departments have been very hesitant, especially at the larger firms. So a firm like mine that's really small and nimble and has been around, I can make those decisions because I'm the head of compliance, right? But if I had a compliance department telling me that I can't do that, right, then my hands are tied and I either need to go start my own firm, which is difficult for a lot of advisors to do, or I just have to listen to what they say because otherwise I'll be fired. And so there's that situation going on as well. And then there are just advisors who are going to be outright against it. And so I think it's going to be a bell curve, really. There's always going to be that, that end of the bell curve that's going to be against it no matter what the price is, right? And then eventually they'll come around, in 50, 60 years or whatever, like their grandchildren will be the ones that, advise people on it. But there's going to be that middle tier of advisors that it's just going to take time, right? And there's always going to be those people on the other side who are at the forefront of it and who are leading the charge on it. And so I think that's just to be expected, and that people have unrealistic expectations of how quickly advisors can move on something like this, especially if they don't understand it. And yes, they've been given time, but I don't think that they've been given as much time as people can appreciate that they need. They need a little more evidence that this is going to stay around. And I think that Bitcoin is providing that, right? The more that Bitcoin goes through these cycles and the longer that Bitcoin is around, then the more advisors that are going to get involved. There were no advisors involved in 2016 when I started advising on it, like literally none. There's a group of 8 of us now that we're the Bitcoin Financial Advisors Network. You can go look us up. 8 is a lot more. It's been 6 years, but 8 is a lot more than 0 or 1. And I'm sure that there's not just 8 of us, right? There's 8 of us on that website because that's all we know about. There are more people who are involved and who are doing this who aren't on that website and who will be in the future. And so, I expect that number to grow exponentially, especially after the halving, if there is a run up, right? And like you were saying earlier, like NGU technology works to get people excited and involved. And I would say that bear markets do that too, because when it doesn't go away and it doesn't go to 0, then people a light kind of goes off and they say, oh, this is really here to stay. Like I've seen this now come and go, quote unquote, but it really hasn't gone anywhere. And that gets advisors involved. And especially if there is an ETF, then there's an actual vehicle for advisors to be putting their clients in. That's not just like ragtag multi-sig setups like we're doing. And so like all of those, I think are going to contribute to advisors going more towards the future for sure, but it is taking time. And I think like we need to give them a little bit of grace, but also, they need a little fire too under their butts to get going as well. So a little bit of both, right? Like a give and a go. The last part of your question though was, sorry, I already forgot it.
Oh, no, that's okay. I mean, there's a lot to unpack there, and it was really well said. Bitcoin, one, it simply wins by not dying, right? This thing can't be killed. It's going to exist forever. And the longer it sticks around, people are like, wow, the government didn't actually kill that thing off yet. It's like, maybe it's because they can't. That light bulb starts to go off. And then another key point you hit on there, which is one of my favorite things about Bitcoin, it's so grassroots. The least friction sort of entities adopt it first, right? So individuals who, I'm my own decision maker, I manage my personal balance sheet, so I can adopt Bitcoin 100% ASAP. But then like slow moving entities like a JP Morgan or the United States government, they're going to be the last ones to adopt Bitcoin because there's so much friction to make those decisions. And so it really just builds from the ground up. And we've had 15 years to front run the institutions, and maybe we'll get a little bit more, but with the ETFs, who knows, right? They might start piling in.
Stocks will be decent, but again, these are all market caps that are, these are market caps that have been exhausted. Stocks in the US are 150 trillion dollar market cap, and Bitcoin's market cap is now growing, right? So you look at stocks and you go, if I look at the triple leveraged QQQ, which is TQQQ, that gives me similar returns to Bitcoin. So, but now I need to take a triple leverage risk option on the NASDAQ in order to do that, and in order to keep up with debasement. The one chart that everyone should look at and bring up is the value of the NASDAQ, for example, but valued in M2, US M2. Because while the price of the NASDAQ has gone up and it looks like people have made a ton of money, the value of the the value of the NASDAQ is not kept up with the amount of money that's been printed. And the reason for that is very simple. There is a difference between price inflation and debasement. Everyone focuses on price inflation. I focus on debasement. If I own 1% of the money supply today, I want to make sure that I control 1% of the money supply in 20 years. What's happened is that people have put in $1 million and they've been given $4 million, but their control of the overall money supply has gone from 1% to 0.3%. And therefore your wealth has gone down. It's not like it's gone up. While you might be looking like you're richer because you have more dollars, everyone else also has more dollars and you don't have enough dollars.
Yeah. I take it you're not a fan of CPI then when people refer to the CPI basket as the inflation rate. Would you think it's better to just look at M2 if you want to know the true rate of monetary debasement?
The only thing that matters is how much of the total money supply you control as an individual. And as long as that is increasing, your wealth is going up. At the bare minimum, you want to maintain that. During 2020, I had a bunch of clients that told me, "Oh, my wealth went up by 30% in the year." I was like, "Great, they printed 40% of US dollars in that time period. So what the fuck does it matter?"
Yeah.
You're actually underperforming the debasement that happened. And you're so happy because Morgan Stanley called you and said we made 30% this year. You got fucked.
Yeah.
Imagine that. The most successful investment year of returns, and you still got screwed.
Yeah. But most people don't see it that way.
Yeah, but that's what happens.
Yeah. I mean, I feel like that's the whole story of the entire 2010s, right? Interest rates were basically zero. People, any midwit with a 401k could just throw at a basket of stocks, and they're like thinking they're Warren Buffett or something, but it's just the currency getting devalued. They're not actually making really wise investments.
Right, because a wise investment happens when you control more of the overall market than you did, not just when you have more dollars. Mm-hmm. And that's what I want to urge people to think about. My parents' property portfolio needs to be valued 50 to 80% higher than it is to maintain its value that they started putting into it 30 years ago. That's insanity. So, that's the issue with the stock market.
Throughout this bear market, what have you taken a certain strategy, or are you doubling down?
No, you know what? I haven't actually been able to buy that much more because I was a dumbass. Because you know what? I knew it, and I said it so many times. Quarter 4 2021 is going to be the top, and my strategy was going to be, and I told I did this podcast with John Kim, and at the very end, this guy Jason Williams, Going Parabolic, joined us.
Yeah, he's a buddy of mine.
He always said never sell. He would say reverse mortgage your house, all this wild shit. And I would always say, we got in this argument multiple times. It's like, okay, if someone bought Bitcoin, right, in the last cycle, if they bought it at 10 and it's now at 70, and it's going to change their life. I'm not telling them to cash out 100%. I don't know, cash out 30%, right? Cash out 30%, pay down your house or something. And then maybe when Bitcoin goes down, because it probably inevitably will, buy some more. And so it's like, that was going to be my strategy. I was going to sell in the quarter 4 of 2021, and it got to 69. I just didn't think that was the top. And it started going down. I'm like, okay, there was the extended cycle theory, and there was all, I'm like, surely it's going to go back up. Like, there's no way 69 is the top. And then I just kept holding, and actually I bought a commercial property at the end of December of 2021, and I did the what Michael Saylor recommends, like the lend against your Bitcoin type thing. Not lend, sorry, borrow against your Bitcoin.
Yeah.
So I did that to buy the building because I didn't want to sell any Bitcoin, and then it just kept freaking going down. And so, you know what? I ended up holding, and I didn't have too much extra cash to keep buying all that much more. I would have obviously liked to sell a few at 70, and then you can buy 3 or 4 back when it's at 16.
Yeah. Well, you didn't get liquidated on your loan, did you?
I never got liquidated. No, because I was way over collateralized. I didn't need that much money. I wasn't aggressive. So I do kind of feel like a dummy though, because if I would have, I think at the time when I took the loan, it was like 45 or something per Bitcoin. So if I would have just sold at that point, right, and then bought, used what I needed to make the down payment for the commercial building that we're in, and then from that point, buy a little bit when it goes down to, the problem is you never can predict when the bottom is, right? Is it 16? Yeah. Was it 22? What was it? You don't know until it actually gets there, and then likely you're well past it by the time you realize, oh, that was actually the bottom.
Yeah.
Yeah. So, if I would have sold some and then bought it, but hopefully I'll just keep holding the Bitcoin and paying for the loan. And then, in say quarter 3 of 2025, I'll be up by many multiples or something.
Yeah. It sounds like the market psychology got you on both ways. You didn't expect it to be the top or the bottom. It's crazy how it always works like that. Always does. I would agree with Jason. Don't sell your Bitcoin, man, because the way I think about it is,
but wait, hold on. In the example I just gave you, why shouldn't I have sold? Give me one good reason why I shouldn't have sold, say, 30% of what I had in quarter
because
4.
You're coming at it with hindsight right now. In the moment, the bull market could have kept going.
Okay, but at some point it was going to go back down, right? Cycle theory is like, okay, we've been through 3 of them. And so last time was actually the smallest crash, and I think it was like 74% or something.
Yeah. But also the way I would throw back at you is at some point I don't think we come back down, right? If we get a lot of these institutions to come in, ape in, if BlackRock and Fidelity and all these have their clients just starting 1-5% position,
we're going to go way, way up. And at that point, I don't think we get these massive bear markets. And that very well could have been the case in 2021. Obviously, it didn't turn out to be the case. But at some point, we do hit this escape velocity. You would never, like if you're, let's say you're in Lebanon and you're holding dollars to hedge against their inflation, you wouldn't sell your dollars at a profit and cash out for liras, right?
Correct. Yeah. So, I mean, obviously, if you're in a different country and a different currency, I say, yeah, for sure. But, so, okay, let's imagine in quarter four 2021, I sell 25%. And it just keeps going up. Because that could happen this time, right? It could say, right? At some point, I do agree the cycle theory will end. But, I got to imagine, we hit a 76% drawdown. If next one's only 50, that's way less, right? We're going to have some type of drawdown next time. Is it going to be 40? Is it going to be 50? Is it going to be 60? I don't know. But there's no way we don't have a drawdown, because now the other thing at this point in time is like a bunch of smart people like you and I are saying, well, we're at the top of the cycle. We're 18 months past the halving, and I'm going to sell some because I bet we're damn near the top, right? There's going to be a whole bunch of people who do that. And then maybe there's a bunch of institutional holders, and it only goes down 46%, right? Listen, I'm not getting out of Bitcoin. I'll probably buy some more. But I think it's a good trade.
Potentially. I would just never sell. I would, one, never get rid of my whole stack. Two,
no, I didn't say that. I didn't say that. Don't
I
put
know you
words in my
didn't.
mouth.
I know you didn't.
Okay.
I know. But two, I wouldn't sell for dollars, right? I would guess I would do it like you did and maybe get rid of some of it for a different asset or to buy goods and services, right? Like selling your Bitcoin to just hold dollars and put the fiat in the bank account is counterintuitive to me.
Well, so for a lot of people, this is why I would argue with Jason. Jason was rich. He was a little detached from reality. So I'd say two things. Well, number one, right now the Bitcoin loan, it's expensive. I pay for it every month, right? It's not cheap, and I have a very high level of conviction that it is going to go back up, which is why I'm holding it and paying for the loan. I think at some point those price points will probably go down quite a bit because people will realize Bitcoin is the best collateral on planet Earth. So I think that'll go down, which makes just loaning it out even a better idea than previous. But then I think the other thing is like, okay, for someone who is middle class, if they can pay off a decent chunk of their house, and I know some people say, oh, it's only 3% or 4% or whatever, right? And they can take away that expense from their life. Like there's some type of peace of mind that comes with that of like, oh, I've been paying off my house for 20 years and I had 10 years left to pay. And because I was able to invest in Bitcoin and be smart and sell at the top, well, now I don't have to make a house payment for the next 10 years. Like that's so, and this is the argument I make with Jason, that's so impactful for some people, And so that's kind of that's the angle I would take on it. But yeah, listen, yes, I think Bitcoin's the best asset. But I think for some people to have a little peace of mind and pay off some of their house or something, I think it's probably a really good idea.
Yeah, I understand where you're coming from with that. Yeah. And the key thing about real estate is I think Bitcoin demonetizes it, right? A lot of the demand for real estate is because we have a crappy money that doesn't hold its value, so people need something to put their value into. Right now, and historically over the last few decades, that's been real estate and the stock market. But now that we have Bitcoin as this superior by all measurements, right? It's more scarce than real estate. It's more divisible, fungible, portable, etc. A lot of those savings are going to go into Bitcoin, and real estate's not going to have this monetary premium. It's just going to be demand from people actually wanting it as shelter. So I think Bitcoin always forever will appreciate against real estate and other hard assets.
You're so hardcore. I don't disagree with you, but I think again, this is the same argument I have with Jason Williams. Talk about a 64-year-old person, and they're two years away from retirement, and their main living expense is their housing payment, and now they get to pay it off 10 years early. Like, I don't know, there's something to be said for that. So yes, I agree. Bitcoin, better investment. And my wife actually was trying to buy rental properties, and I was like, nah, why would we do that when we can buy Bitcoin? That's dumb, So like, I'm on the same page as you, but I think there's something to be said for selling a little bit at the top. And I will. Next time, I'm not gonna mess up. I'm gonna buy. So I'm gonna sell some at the top. You know what else I'm gonna do next time? Because you put this in the doc. Yeah. I'm gonna do some shit coining.
Oh,
okay.
No.
Dude, hold on. I'm gonna tell you exactly what I'm gonna do. I'm just gonna be honest with you. I'm all with you. Bitcoin's the best. Bitcoin's number one. I love it. Okay. all the way down the rabbit hole. But I think there's no way in the next cycle that you can buy some shit coins and they're going to go up at a higher level and you just got to sell. Or this is where people get greedy. And especially, I didn't really do any. I bought like one or two other things last cycle, and I did sell them at a significant gain because I wasn't a dummy.
In terms of Bitcoin or in terms of dollars?
Oh, that's a great question. Well, no, it was more because like Cardano, I bought Cardano and it went up. It went from 8 cents to, and I didn't sell it quite at the top, but pretty close. It went from 8 cents to 2.50, I think, something like that. And Bitcoin in the last cycle went from 3-ish on the bottom to 69 at the top. So that's 23x versus like almost a 40x. And then I bought Ethereum at, it was right after the crash, right? So you're talking March 2020. I think I bought Ethereum at 160, and Ethereum went to, and I did sell some Ethereum like right at the top, like picture perfect timing. Like 4,400 or something to that effect, So that was like almost a 30x also. So yeah, I know. So yes, in Bitcoin terms, I made money. In dollar terms, I made a lot of money. Listen, it's the bull market. All these shit coins are going to go up and likely at a higher multiple than Bitcoin.
No, that's where I disagree, man.
Okay, hold on. All right, let's get into it. I'll just tell you, in 2017, I was a fool. I bought a bunch of them. My buddy who got me into Bitcoin also was into a bunch of shit coins, and a bunch of them went up by a huge multiple, and I didn't sell, and a lot of them went to zero. And so that was the last cycle. I'm like, okay, I know I don't want to sell Bitcoin, but I know I have to sell these other things because they are going to go down by an insane factor, more than Bitcoin. So I'm going to sell them, and I sold them with proper timing, and I anticipate doing the same thing this time.
But see, this next bull market though, that last it was retail stimulus, like degenerate Wall Street
and
bets,
that degenerate SBF freaking selling Bitcoin. Yeah, that's what ruined our 100K. That degenerate, him and freaking CZ was probably doing the same thing, I'm guessing.
But here's the thing. Here's what's coming in 2024 is this spot Bitcoin ETF. It's not an ETH ETF. It's not a Cardano ETF.
Yeah,
Wall Street's buying Bitcoin. Crypto's getting regulated, right? The SEC is going after Coinbase. They're going after Binance. All these shitcoins in terms of Bitcoin are going to go down.
They're toothless. They couldn't beat Ripple. If they can't beat Ripple, they can't beat anybody. They are winning 0 lawsuits. They suck.
It's true, but Wall Street still, they don't want the shitcoins. They want to buy Bitcoin. So I think this idea that shitcoins will outperform Bitcoin in the next bull market, I don't think that's going to be the case. Okay. They'll go up in dollar terms, but I don't think they'll go up in Bitcoin terms.
All right, Mitchell, here's the thing. If Bitcoin goes to the moon, I'm super rich. So we're cool.
Yeah.
I'm perfectly happy. And so I'm gonna gamble on some of those shitcoins. I'm not gonna tell anyone what I'm buying. I'm just gonna buy a little bit of this and that, and have some fun because I like who doesn't like gambling? We all like gambling, right? And I will have my stack will still be 80 to 90% Bitcoin, and I still think it's the best. And I'm not going to promote anything else like I haven't in the past. People say shitcoin. Litecoin is Bitcoin Lite, right? It is literally the same protocol. I know people don't love Litecoin. Besides Litecoin, I haven't really pushed anything else. 0 other things.
Litecoin is a commodity in the same way that manure is a commodity, right? You don't want to store value in manure, but it is a commodity technically.
Yeah, I suppose I think so. You know what? Litecoin's chance was that the SEC was actually successful in suing a lot of those other cryptos, and made them securities. Because if all this other stuff became a security, Cardano, Ethereum, et cetera, if they all became securities, then the money would flow into only two places. It would be Bitcoin and Litecoin, because that would be the only other one. But since the SEC can't do anything, they can't get anything done because they suck. I don't know. We'll see where Litecoin goes. But yeah, that would be the only thing else. But that would be from a sound money protocol. It literally is the same code as Bitcoin with 2.5 minutes instead of 10.
I would say it's a winner take all, but we can have that conversation for another day.
That's fair.
I got a list of questions here, and I actually want to start out with something that might be like, I don't want to come off like aggressive or anything, but you made some comments on a show about 2 months ago, and I just wanted to question you on these. So it was the Kitco News show, and I'll just read your quote here.
Yep.
The idea of Bitcoin being the thing that everyone in the world uses to exchange value died pretty quickly after the white paper was written.
part of the problem is that the distribution of coins wasn't broad enough. Could you just clarify what you mean by that?
Well, what I mean is that peer-to-peer electronic cash network is not really viable in the, I think the sense that some people thought of originally, which is, you and I would exchange it all the time, and it could, the chain would process thousands and thousands of transactions per second and compete with Visa. It's not possible, right?
Yeah.
And in technology, you can either be secure or fast. And you got to choose one. And Bitcoin blockchain chose to be secure. It's the most secure computing network on the planet. Hundreds of millions of transactions, never been hacked. Not one fraudulent transaction. Think about how many times you had to get a new Visa card because they run on a mainframe computer on COBOL, and it's vulnerable.
Yeah.
A lot of attack surface, but they can process 30,000 or whatever the number is transactions per second, and Bitcoin's like 6, something like that. So that, I guess the flip side of that is, I think the criticism people would lobby back at me at, well, no, you're just missing the point. Is ultimately it is going to be the only thing that people exchange value in. Maybe. I mean, it's certainly possible, but pretty unlikely. Think about you gotta defeat all fiat.
I think fiat might defeat itself, hopefully.
Well, but fiat has defeated itself over and over and over again throughout history, but it just rises back up.
So what do you think about the Lightning Network then? You think, we'll be able to build these user-friendly and quick payment applications on top of Lightning?
For sure, the only way to scale Bitcoin as the base layer is through L2s or L3s or L4s, which don't exist. Conceptually, they exist. And Lightning definitely is there, but it's not really scaling the way you need it to. There's a very small number of people on the planet that even know how to use Bitcoin in any way, shape, or form. Vast majority of people on the planet either don't know about it. 3 billion people on the planet that couldn't even access it, even if they knew about it, because they don't have electricity. So, or consistent electricity. But ultimately, things like Lightning have to exist if Bitcoin is to be this peer-to-peer network. But at least so far, there's been a lot of hype, and at least from my understanding, not much progress. There's been some, and look, we're investors in companies like Strike, where it's pretty amazing. I can take fiat and convert it into Bitcoin instantaneously, transfer it anywhere. We're sitting at a world map here on the table. I can transfer it anywhere in the world instantaneously, and they can take fiat on the other side at zero cost. Now, if Jack's listening, 0 is the wrong number. So we need to make some money. And he knows that, but you're trying to scale the app and then monetize later. But and that is amazing, right? We're using the Bitcoin blockchain, the rail, to exchange value, but that value is still fiat.
Yeah.
And I think there's Bitcoin network and Bitcoin, like what, big B and little b,
Yeah,
or little
like
b
the
and big
asset
E.
in the network.
Yeah. And so the idea that everyone uses, so my comment, really, I think I was quoting somebody else on funny how things get pulled out of hour-long conversations. Not you, but generally speaking, people can see 30 seconds of an hour-long interview, and they're like, "Oh, you don't know anything."
Yeah, it might happen
Like,
with this
okay,
one
so
too.
Did you listen to any of the other things that we talked about. But this idea that we're actually going to physically exchange Bitcoins or Bitcoin, because there really isn't any coins, right? There's no, it's always it used to be a gold disc and had a B and a C on it. That was the original logo. And then it went to a gold disc with just a B on it. And then it went to the orange disc that we have today. And I always joke, there's no gold and there's no coins, right? Literally no gold and no coins. So the problem with exchanging Bitcoin is the volatility, right? I can't, as a merchant, take Bitcoin if by the time I get it to the bank, I've lost 10, 15, 20%, whatever it happens to be over that day or week and you say, well, but that volatility will decline as more users get involved. Yeah, that's logical. But and you can say every currency fluctuates. But think about it. It fluctuates relative to something else. Mm-hmm. That's the whole time. One Bitcoin is one Bitcoin. It is one Bitcoin. And what it fluctuates is not versus itself, but versus something else. So we price in dollars here in the United States. Other people price in other currencies. So in Argentina, they're not having a bear market in Bitcoin. It's all highs right now. It's getting, yeah. So that's another thing where over time, you either have to have all or none, right? If you and I exchange Bitcoin, but we still have to buy energy drinks in fiat dollars, then there's risk of value diminution or accretion. It could go the other way.
Yeah, in the short term, anything can happen, really. I agree with a lot of what you're saying. I just think it takes more time, right? Bitcoin's only 15 years old, Lightning even less than that. I think, we give this thing another 1, 2, 3 decades. We very well could be using Bitcoin on a day-to-day basis. And I think there's so another thing you said there was Bitcoin is saving, or it's saving, not spending. And I tend to agree with that, but I also think you can do both, right? Like with Sovereign, I could buy these in Bitcoin, right? The way I think about it is maybe I have a cold storage wallet that's saving every, a percent of my income always goes to that long-term savings, whatever. And then I have a hot wallet with a few Satoshis on it. If the value fluctuates on a short-term basis, so be it. Maybe I lose 5, 10% here or there, but maybe I gain 5, 10% here or there. And that can be the Bitcoin that I spend, right? So it's not necessarily any different from having a savings account and a checking account at a bank. It's just doing the same thing with Bitcoin.
100%. And you certainly can as a novelty, right? There are very few people, very few businesses, very few merchants, very few products that you actually can do that. Yeah. I mean, there are some. There's one right here. And there are an increasing number of apps trying to solve that. Yeah. But in the end, what they're really doing is a conversion into fiat. Mm-hmm. That's okay. But the risk remains the same. If I took that dollar that I earned a year ago, well, actually, it goes the other way. Over the last year, I'm thinking since the bear market started in 21, could have taken a dollar and you go to spend it a year later and, work 25 cents on the dollar. Mm-hmm. Now, in the past year, it's up 40%.
Yeah. I guess over the long run, as Bitcoin continues to go up versus fiat, more often than not, you're going to end up on the good side of that situation as a merchant.
Really, it's only Bitcoin companies that's actually listed and trading publicly on public exchanges, right? Because crypto companies, they essentially, their goal is to just raise capital through ICOs, right? They're not leveraging existing public markets to raise capital. And Bitcoin is just fundamentally different. And where I try to break it down for them is, mainstream media narrative is that Bitcoin is boring, old tech, but blockchain is interesting, right? Whereas I say the reality with Bitcoin a lot of times is the complete opposite. The reality, in my opinion, just from from first principles, a blockchain, all it is just a distributed database, right? Distributed databases are inherently less efficient than centralized databases. And if you look at databases across the spectrum, on one end, you have the most centralized databases like the Amazon AWS, Microsoft Azure, Google Cloud, right? And on the other end of that spectrum, the most distributed and decentralized database in the world is Bitcoin, right? And crypto and everything else that try to play in between that spectrum of fully decentralized and most decentralized is kind of where crypto sits, right? And there's, Bitcoin is obviously open source code. They copied Bitcoin's original code and then they tweaked it. And so anything that tries to play in the middle, like an Ethereum, trying to do smart contracts, you have to use larger blocks, and that over time, leads to more centralization, right? Like half of Ethereum nodes are hosted on AWS. But my main point there is, and I try to kind of put it into words that they understand, anything that plays in the middle of this spectrum doesn't have a moat. It doesn't have a long-lasting, sustainable competitive advantage. And we saw this last cycle, right? Because at any point in time, you can always a competitor can come in and crank up that centralization and be better, faster, and cheaper. We saw that this last cycle with Solana and Avalanche, as an example, right? They were able to crank up the centralization and use Ethereum's narrative against it. And essentially, they took away DeFi market share and NFT market share just by being better, faster, and especially cheaper. So I just think anything that plays in the middle, you just don't have that moat. And so to me, it doesn't make any sense. And I've been really trying to get Wall Street to focus more on Bitcoin, because everything that's in the middle, unless you're a VC and you can get in early, right, for the exit liquidity on retail, I just don't think it's sustainable. And there is no publicly traded Ethereum company.
Because you wrote a whole book about real estate. Obviously, you're super into that. Was it hard to really digest Bitcoin and realize, all this success you've had in real estate was just pretty much off the back of fiat money? Was that a humbling experience when you realized that?
Absolutely. And partly it's because, we grow up with this like activity bias, right? It like this busyness. We think we need to be doing something. Like if we're not effectuating something ourselves, we can't just make money. You can't just sit by and have money. And so real estate is just so obvious and tangible. And I could work with my hands and I could put up a wall and I could paint. And, it sounded like proof of work, which on one hand, it really is. Like if you really can work on real estate and add value where you're increasing the utility value, you're adding a room, you're adding a story, I think that's fantastic. But yes, once I was learning about Bitcoin, that look, I don't need to distort the value of a utility for someone that really needs one just because my piggy bank is broken. So now I'm going to monetize this utility asset and increase the prices so they can't afford a home, but it works for me because, the price of all of this real estate is just going up like crazy. But I never in a million years thought that was happening not because of me, but it was happening because there's just more dollars in the system, right? Like the value of that house didn't go up. Mm-hmm. The value of the dollar went down. So it's requiring more of those same, political units to acquire the same real estate. So that is a very humbling experience in many respects to realize that, because this is what I tell my friends, like just the other, like every day through my mortgage company, people are calling me because they're trying to get loans to either have more income properties, more passive income, or, to start an Airbnb business. They all want to do something. And and I always ask them this question, which is the first orange peeling part for a lot of real estate people. It's like, do you really want to own that place over in Nashville or in Austin or wherever? Or do you just like the flex? Do you want to go to a party and say, oh yeah, I've got a place in Austin, I've got a place in Nashville? And if they're really honest, if they're being, genuine, a lot of times they like the flex. 2, do you really want to be a landlord? Do you want to deal with the toilets, with the trash, with the tenants? Or do you really just want the money that gives you? And when you think about it, it's like, well, who really wants to be a landlord? Even some of the biggest landlords out there, do you really, really want to do that? Or do you want the money that it gives you? So it's all we've known, right? And what do we have? Like $900 trillion in our system. And there's 350 trillion in real estate. And a lot of that's just in passive real estate. That's not in just single homes. So it's like, imagine as people can shift out of that, can concentrate on their first job, not have a second job of learning how to be a broker or a handyman or a carpenter or a real estate agent, or a property expert, and and put that into something that's pure and egalitarian and basically gives you peace, because it can grow your wealth in a way that wealth was meant to grow from scarcity and from holding. So
Yeah.
yeah.
Yeah, I mean, that's really well said. And I think to just sort of clarify for the audience, because that was really well said, but we may be jumping like 5 levels ahead of where a
Jump
normie
all over
would
the place.
understand that. Yeah.
I'm sorry.
Yeah, so like Bitcoin, because real estate has these 2 conflicting things driving up the price, which you mentioned. You have the utility value. People want to live in this house because they want to raise their family there. They need a roof over their head. And then you have the monetary value, which is the dollar sucks. Investors, which is just everyday people need somewhere to store their wealth. So they're bidding up the price of real estate because it is somewhat limited in supply, and there's always going to be demand for it. But Bitcoin's better at that property because it's actually truly scarce. You don't have to be a landlord. You don't have to take out the trash and manage tenants. You don't have property taxes. You don't have maintenance. You don't have all of that. For all those reasons, Bitcoin is a superior store of value because of its properties and the fact that it's liquid, right? If you're trying to sell a house, you need to hire a real estate agent. There's a 3% commission fee. It's going to take months, or depending on the time of the market, it's just uncertainty there. It's not divisible, right? Which creates this barrier to entry. Like, poor people can't really buy real estate. They can't save their wealth that way. The more money you have, the more credit worthy you are. You can buy more real estate, but anybody can buy any amount of Bitcoin. So it's just such an interesting juxtaposition there of, why Bitcoin is so much better at being a store of value than real estate. Do you think this sort of like demonetization, right, where capital goes into Bitcoin when it otherwise would have went into real estate, do you think that's a real possible scenario? And if so, how long do you think that transition will take?
I think it's starting to take place already right now, because one, with interest rates higher, people don't like the cost of that debt. And so they're looking for other places. As well as we educate people on what Bitcoin is and how Bitcoin can do what real estate does, but in a superior fashion, why take the risk? And as you just pointed out, that is the biggest problem with real estate, is that it's not set it and forget it. It's really a second job. And, like, the government can, so like I once lived at a place that was, right by LAX, right by the beach, but right by LAX. And if I looked across the street, there were no houses there. There one point was, but the airport kept expanding. I was literally on the 0-yard line with my little house, like looking at land owned by the airport. At any time, and I looked into this because I got concerned, if the airport expands again, they would just take my house, and they're not necessarily going to give me market value. And this is something that I essentially owned, right? But it's like, we know that owning homes is really just rent rebranded, where you're paying your money to the government. You're paying it to the bank, because why am I paying property taxes on something that I own? I get it. If I'm selling, you want the capital gains tax, which I look as a penalty for having left fiat and put it into something else and coming back. So it's like, here's a capital gains tax. But like with Bitcoin, and you look at it as pristine collateral, where it's like, well, I never need to sell Bitcoin. The wealthy, even the wealthy that own real estate and continue to acquire more real estate, they never really sell it. They use it as collateral, but it's not pristine collateral, right? Because it deteriorates, because it needs maintenance, because it's not liquid. You can't move it, as the environment changes, and you can't change the utility. If you own a set of storage units, they're always going to be storage units. If you own a high rise, I mean, look what's happening to commercial real estate in the office market right now. Like, it's completely collapsing right now. They're just sitting empty. I just read recently in San Francisco and in Chicago, they're being sold for like 10% of what they were purchased, these huge office buildings. So if you love real estate, if you love working on things and flipping, and you can add utility, I think it's great. I still love real estate. But for people that really just want to save their excess contribution to society because they've been that effective, they've been that productive, and they've given more value than they've taken, and they want to carry that forward in time, real estate really isn't the best.
Yeah, for sure. And I think if people are looking at it as an investment rather than savings, which a lot of people are, then it's a very different picture than if you're just saying, okay, like I'm going to save some things in dollars because I use dollars on a regular basis, but I also want to have savings in Bitcoin because that's long-term savings. And that's something that I'm going to use in the future. Where like I believe in the future that we're just going to be able to outright use it, and there's going to be a de minimis amount where we won't even have to pay taxes, but you'll be able to go buy dinner with Bitcoin, and you'll be able to go buy a couch with Bitcoin, and it won't be a big deal, and you won't have to report on it. But like in lieu of that, right, we're still in this weird place where we need to have both this short-term savings and this long-term savings, right? And so I think if people start viewing it more as savings rather than an investment, it changes the whole financial picture, because then you're thinking, okay, how much savings do I want to have versus how much do I actually want to have allocated to risk investments? Right now, we're all forced to buy risk investments, or not really, right? Because there's Bitcoin, but like the way that we were viewing it prior to Bitcoin is that we're all forced to go beyond our risk tolerance because we have to beat inflation. There's no way out. You can't just hold cash in a mattress the way you maybe could 100 years ago and expect there to be staying power. And so at a minimum, right, like the government is targeting 2% inflation, in which case you have to do something. And so for most people, like they're using the S&P 500 basically as a savings account, right? And it's totally inappropriate because you can't use a company, a bunch of businesses as a savings account, right? You need actual savings. And actual savings is what's going to help you in situations like, in 2020 with the whole COVID scare, right? There was a complete removal of liquidity from the system. And it's because people are living paycheck to paycheck, and they're putting their savings into S&P 500 because they don't have anywhere else to put it. And so then people have to sell the S&P 500 to go put food on their table. It doesn't make any sense, right? Like people need to have cash around. And governments around the world have undervalued savings, I would say, and that's making a comeback.
Why would someone want Bitcoin over gold, over real estate, over stocks? Like, what makes Bitcoin the winner in this situation where currency debasement is sort of inevitable?
Yeah, and it's a great question, especially for those people like we talked about, the TradFi Wall Street types, because a lot of them say, hey, I can just, buy my tech stocks and I'll be a good investor and I'll pick some winners. And like, why do I need Bitcoin? Also, there's the gold bug community. And I was a former huge proponent of gold. So I totally get that people, where the gold bugs are coming from. But as you know, there are some gold bugs who are totally anti-Bitcoin. So the question you just asked giving a coherent answer to that, I think is huge for these different communities who are still not really open to the idea of owning Bitcoin. So for, Bitcoin versus stocks, for example, or real estate, let's say the more traditional investments, Bitcoin is a pure play on monetary expansion. When you own a stock, the things you're supposed to do when you invest in stocks, like you're supposed to actually do research when you buy stocks. You have risk of like, you have to understand the competition for the company across their industry. You have to understand that the company's management, are they run by a bunch of people who are incompetent or frauds? Is there some sort of headline risk that's going to shut down the company? Do they have regulatory risk? There's many more things, but you have to basically make it a full-time job if you're really going to be successful picking stocks. Real estate's kind of the same thing. Like you have tons of liability when you invest in real estate, regulatory risk. You have to understand the market you're investing in. So I would say, yes, you need to understand certain things about Bitcoin for sure. And that is a long journey. That doesn't happen overnight. But Bitcoin, I would make the broader case that Bitcoin is a savings asset, a pure monetary play, whereas stocks and real estate, you're supposed to do research on these things to understand them. Now, the counterpoint to that would be people say, but I can just invest passively. I can buy a REIT. I can just invest in the S&P 500 and tech stocks. To that, I would say, okay, fine. Looking back the last 10 to 15 years, those have returned pretty good numbers, like anywhere from 8 to 15% per year. Just investing passively in like QQQ or SPY or some real estate type investment vehicle. But I would just say, again, coming back to the regime change that we talked about, do you think that the same trends of the past 20 plus years are going to hold going forward. And the people who think that their passive investments are totally safe, I would just encourage them to think, what would have happened to your passive investment in 2008 if the Fed didn't step in, if the fiscal policy didn't step in with major bailouts? What would have happened again in 2020 if we didn't get fiscal and monetary bailouts? You would have lost your shirt. You would have had certain investments that just went to zero. The only reason why stocks have performed the way they have, 10 to 15% on average for the last, 15 years, is because of those bailouts. So you are making a conscious bet that every time there's a big issue in the markets, the Fed and the Treasury are going to come in and support the markets. You might be correct in that. And that's why, I think people are okay owning stocks. But what are the effects of the Fed and the Treasury bailing out markets every time? They do that by monetary expansion. So if that's your assumption going forward, don't you want to own the asset that's going to benefit the most from monetary expansion? And then just lastly, on the Bitcoin versus gold point, which we can definitely get into because that's a loaded topic. But just for starters, I would just say valuation to someone. If gold is worth 10, 11 trillion are usually the estimates that I see total market cap of gold globally, and Bitcoin being 700 something, that means Bitcoin has to go up 15x in order to match gold's market cap. If they kind of do the same thing and play a similar role, wouldn't you want the one that's underappreciated? And this is a valuation framework that people use on Wall Street. It kind of frustrates me that they can apply it to corporate bonds. That's what we used to do. We'd say, this is a BBB rated corporate bond. They just levered up to buy this other company. That's why it needs to trade at a wider spread. But, as they de-lever, it's going to come down to this single A rated credit, and, we'll buy it because it's going to tighten. The spread's going to tighten. That's corporate bond jargon. But basically, they could apply that same valuation framework and say, okay, gold and Bitcoin are kind of similar, but one has a market cap that's 1/15 of the other one. I think I might want to own that for some upside. But again, somehow that message does not land with the Wall Street types.
Now, the funny thing about the central bank, Federal Reserve, neither federal nor has any reserves, right? It's a private entity owned by the families, Rothschilds, Morgens, et cetera, owned by the banks. And its job is to enrich the bankers. That's its job. And in so doing, it steals wealth from the masses in the form of inflation. And so from 1776 to 1913, a dollar, which, by the way, we took from the Rothschilds, it was called the Rijksdollar in the Netherlands. And so we shortened it to the dollar. And from 1776 to 1913, a dollar was worth a dollar. A little fluctuation around that crazy period with the free banking era, which was a problem when they didn't have a national bank, but and a civil war. But it was worth a dollar. From 1913 to today, it's now worth 3 cents a dollar. And that's that thing of inflation. And that construct is just so debilitating to me, in that we are all, again, as Jimmy Song so eloquently says, we're debt slaves. And the only way to liberate ourselves from that is to have a deflationary currency like Bitcoin instead of an inflationary currency like fiat. And so that's why, Liberdad, liberty, freedom, whatever you want to call it, it's really what Bitcoin is. And it'll take time, for everyone to get it, as we've talked about. It'll take time for people to have enough of their wealth denominated in it to really be meaningful and useful in their life day to day. But to have a piece that, it's your run-in money, your FU money, whatever you want to call it, total necessity. Because, look, do I think the dollar is going to hyperinflate like Weimar Republic? No. Do I think, the cult of Kelton tried to do that post-lockdowns? with doubling the money supply. But we've been a republic for 247 years. Took 245 years to print 10 trillion. And then we did it in 18 months. Insane.
Mm-hmm.
And Fed's working hard to try to reverse some of that. We actually had negative money supply growth for the first time in 100.
Yeah, it's crazy to look at the chart. And it's also crazy that people don't think that's going to end up in a recession.
Exactly. So lots of things that point you to, if you're not following Bitcoin, if you're not investing in Bitcoin, if you don't have any exposure, that's my hashtag get off zero. We created way back when Pomp and Jason were around.
You guys coined that?
And oh yeah.
Oh, nice.
Oh
yeah.
yeah.
I mean,
that's my line.
Yeah.
I mean, Pomp might say he invented it, but I invented it. And I've been hashtagging it since 2017. And
it's a good one. It's because I think the best catchphrases are ones that outlive the creator. I didn't even know where that came from, but it's perfect.
And the key is zero is the wrong number. I'm not saying you should have all your money, and I'm not, because at least for now, we still live in a fiat world, but zero is the wrong number. And every human being, every institution, everybody needs to get off zero. And so the more you learn about it, the more you understand it, the more you get that. And I'm actually changing my mind a little bit, right? In the sense that, you convinced me that maybe my stance that an open airdrop at the very beginning, while to me still would have been better, probably would have resulted in the same thing. Russia tried that with their voucher system. They airdropped all their state assets to everybody, and the mafia went around with guns and took them from a lot of the peasants. I shouldn't say peasants, the populace.
Yeah.
The mafia treated them like peasants.
Yeah.
Or the oligarchs. They're not the mafia, the oligarchs. Used my phrases right. But the oligarchs got all the money. So probably the same thing would have happened here. But ultimately, as people convert what currency they have into this better store of value, we will get equilibration of ownership. And I do think we need to go to sats, right? That's why my handle on Twitter is @MarkYusko, hashtag 2.1 quadrillion. Because it's 2.1 quadrillion sats, and that's plenty for everybody.
Yeah, I'd almost even say we need like a middle unit, like bits or something, maybe a few decimal places in.
Yeah, that's a good idea too. All right.
Yeah, I appreciate you coming on. You spit a lot of fire there at the end, and I mean, fiat really does fund endless wars, right? Because they can just pay the troops until the money loses all value, which they wouldn't be able to do with straight taxation.
War is profitable, and we can't pay for it. Janet Yellen said on TV, of course we can afford 2 wars. No, we can't, Janet. We have $1 trillion deficit right now. We have $1 trillion deficit with a T, $1 trillion. That's $1 every second for 31,710 years. That's a shit ton of money. And we can't even afford what we do now. What you're saying is we, the people in charge, want to launder a lot of money and get really rich. That's what you're saying. It's not about affording war. War is a way of money laundering for wealthy people. Because what happens, Mitch McConnell even says it's crazy. He says, we're not sending money to Ukraine. We wire money to Ukraine. They wire it back to companies that just happen to be in the districts where the senators were and congressmen.
Mm-hmm. And they happen to have bought stock of a couple of weeks before the war gets announced.
Exactly. We just got announced. So, but it's been going on forever. It's not going to stop. It just won't stop. Humans are going to human. And humans in power, absolute power corrupts absolutely. And
you say you don't think a Bitcoin standard fixes that human error, human greed?
It certainly makes it better, but again, you're still going to have the problem of unequal distribution and self-organization. Humans organize into our structures. Yeah, they always have. They always will. And the powerful want to control the weak. And the powerful like using leverage to get richer. And Bitcoin, if everybody were on if everyone were on Bitcoin instead of fiat, it would be harder to devalue everybody's ownership through money printing, but it wouldn't stop. In fact, like to think about this, but it might take us back to the bad old days where the bigger your gun, the more you had, right? And so
I would still say the
that.
world's kind of like that in a way, right? The bigger your missiles and your nukes, the more you're going to have.
Oh, for sure. But that's not individual hand to hand.
Yeah.
Like in the old days, if you were on your farm out on the range and somebody drove by and they had bigger guns, they just shot you. They just took your stuff because there wasn't enough law enforcement. There wasn't enough rule of law. And in some ways, that threat of violence by governments check most people. Like, we still have crime.
Yeah.
Don't get me wrong. But by and large, things run pretty smoothly. People pay attention to traffic lights, and people don't rob banks very often, and planes fly without getting hijacked. And so I don't, the elimination of all governments and a singular virtual nation state, I don't know how that would work. I don't think anybody knows how it would work.
Mm-hmm.
It could be utopia.
Yeah. I mean, it comes back to a point you made at the very beginning, which is like a lot of governments, they start with good intentions. Like, we're going to finally do government and, it's civil rule setting the right way. And it always just erodes into corrupt humans corrupting everything. But I guess that's what makes Bitcoin beautiful, because no one human or no group of humans can change the protocol. The ETF passing, that's the starting line. Things will get interesting in the months and years after that.
Yep.
So let's imagine this. We get this God candle, which I think we can agree is most likely coming, but it's still going to cost, the same amount in dollar terms to mine Bitcoin, right? So then that presents a very interesting opportunity because, price can go up 2-3x in very short order, but hash rate cannot do the same. So there's going to be an opportunity for Bitcoin miners. Let's dive into that. What are your overall thoughts?
Yeah, okay. I think that it's hard for people to really, especially those who are familiar with Bitcoin mining, and I think Bitcoin mining is one of the overly it's like this, it's almost like scary conceptually, but it's actually insanely simple, right? I think so. One, it's going to become a lot more mainstream, but I think like from an opportunistic perspective, incumbent miners coming out of bear markets into bull markets, which turn very quickly, have historically and will, in my opinion, at least for the next few epochs, be the ones who are positioned to win at the greatest, disproportionate level of winning, right? And so why? Well, number one, what Bitcoin mining is effectively arbitraging energy. You're taking in energy, that has a reasonably fixed cost, and then you are producing Bitcoin that has a variable cost or value, right? That is based on natural economic incentives, going to have a higher weighted value than the energy that was put in. So you're arbitraging Bitcoin, you're arbitraging energy, and you're turning it into Bitcoin, right? Now, why are miners that are incumbently positioned more set up to win? You made one really good point, which is I think is super important to understanding the like practical nature of this point, which is hash rate, difficulty cannot move at a pace that is anywhere near as fast as the pace at which Bitcoin can move, right? If we get when these ETFs pass and when people start coming in and the snowball effect happens, like you can shoot up 100% in value. Even just this year, we've shot up over 100% in value in Bitcoin price, right? Now, in order to get to that same equilibrium in, theoretical computing, available computing power, you have to build, it costs billions of dollars of investment to double the amount of computing power, infrastructure, right? You're talking about ingesting a, very significant amount of energy, That's a scarce commodity in and of itself. How long do you think it takes to build a power plant or a solar field or a bunch of windmills, right? Or whatever, or a dam or a natural gas turbine or whatever it might be. That takes time. How long do you think it takes? My neighbors are building a house. I've been watching that be built for 6 months. Now imagine like how much longer it takes to build a power plant, right? Yeah. I'm kind of going through like the basics of this evolution. It takes a long time to build energy resources that can need to be consumed to, increase difficulty to even keep up with price appreciation. And it takes a lot of money to do that as well. Then it takes a lot of time to build out the infrastructure. Building data centers, it takes a lot of money to do that as well. So you have to have power, you have to have infrastructure, you have to have construction, you have to, not mess stuff up. They were talking about like years and significant capital deployments that need to take place. So hash rate in this example is actually a drastic laggard to Bitcoin price, right? Because Bitcoin price can rocket up, and when that rockets up, you have an incentive to, invest in power, generation, infrastructure, construction, so that you can mine Bitcoin and take advantage of that, arbitrage opportunity. But as you mentioned, the cost is going to trend towards the cost of production. So eventually that will, equilibralize a little bit. So the net is like Bitcoin price velocity outpaces Bitcoin hash rate increase velocity significantly, right? Or it can, right? I mean, who knows what actually plays out, but it's a lot easier for a bazillion people to go click buy or go open their Fidelity app and buy the Fidelity ETF than it is for somebody to go raise, $50 million and then build a data center consuming, 100 megawatts of power, right?
Yeah, very well said. And it's not even a theoretical situation that you're describing. We already saw this play out in the last cycle. Hash rate went on a bull market in 2022 after price rips. So price rips in 2021. Everyone's like, oh, wow, I could buy Bitcoin. But wow, the mining economics look really good right now. So let me go raise money for that instead of putting it into spot Bitcoin. And then you don't see that bull market in hash rate until 2022 and into 2023. So this will, yeah, what were you going to say?
No, exactly. And I think the other part, another byproduct of this, there's multiple ingredients in this, dish. One is like infrastructure, power, everything we talked about, and the lagging effect of that, relative to price price velocity, potential velocity. But the other part is like, why are Bitcoin miners, incumbent miners coming out of bear market's best position is because hardware is cheap. Right? Bitcoin mining takes infrastructure, energy, and then ASICs, which are the servers that mine Bitcoin. And they are currently representative. The price is like ultra bear market price, right? So like I can go buy really cheap miners right now relative to what the future looks like. The net present value of these miners is like, nothing, because if Bitcoin's at 100,000, I'm going to like make directionally accurate statements here without, having the mathematical, to directly support this. But, Bitcoin shoots up to 100,000. You can go buy, latest generation machines for, a few $1,000s kind of thing, $3, $4, whatever $1,000. It's like you could mine that in a quarter, right? You can mine that in a month in some capacity. And then that machine is logically going to be worth like 4, 5, 6, 7 times more than it is. Yeah. Right? So it's like, that's why you're positioned, because yeah, you can go buy cheap miners right now, and guess what? You're still arbitraging Bitcoin. You don't have the fattest spread ever, but talk to me when, an S19J Pro costs $11,000 again. And you're like, oh shit, man, we should have bought that for $500, back in the day, or, $1,000 back in the day kind of thing.
Yeah.